Scientists, technologists, engineers, and visionaries are building the future. Amazing things are in the pipeline. It's a big deal, but you already knew all that. Such speculation is common. What's less common? Scale. How big is big? Silicon Valley, Silicon Alley, Silicon Dock, all of the silicons around the world, they are dreaming the dream. They are innovating, Catherine Wood said at Singularity University's Exponential Finance in New York. We are sizing the opportunity. That's what we do. Wood is founder and CEO of ARK Investment Management, a research and investment company focused on the growth potential of today's disruptive technologies. Prior to ARK, she served as CIO of Global Thematic Strategies at AllianceBernstein for 12 years. We believe innovation is key to growth, Wood said. We are not focused on the past, we are focused on the future. We think there are tremendous opportunities in the public marketplace because this shift towards passive investing has created a lot of risk aversion and tremendous inefficiencies. In a new research report, released this week, ARK took a look at 7 disruptive technologies and put a number on just how tremendous they are. Here's what they found. Deep learning could be worth 35 Amazons. Deep learning is a subcategory of machine learning, which is itself a subcategory of artificial intelligence. Deep learning is the source of much of the hype surrounding AI today. Behind the hype, however, big tech companies are pursuing deep learning to do very practical things, and whereas the internet, which unleashed trillions in market value, transformed several industries, news, entertainment, advertising, etc., deep learning will work its way into even more, Wood said. As deep learning advances, it should automate and improve technology, transportation, manufacturing, healthcare, finance, and more. And as is often the case with emerging technologies, it may form entirely new businesses we have yet to imagine. Bill Gates has said a breakthrough in machine learning would be worth 10 Microsofts. Microsoft is $550 to $600 billion, Wood said. We think deep learning is going to be twice that. We think it could approach $17 trillion in market cap, which would be 35 Amazons. Fleets of autonomous taxis to overtake automakers. Wood didn't mince words about a future when cars drive themselves. This is the biggest change that the automotive industry has ever faced, she said. Today's automakers have a global market capitalization of $1 trillion. Meanwhile, mobility as a service companies as a whole, think ride-sharing, are valued around $115 billion. If this number took into account expectations of a driverless future, it'd be higher. The mobility as a service market, which will slash the cost of point-to-point travel, could be worth more than today's automakers combined, Wood said. Twice as much, in fact, as gross sales grow to something like $10 trillion in the early 2030s, her firm thinks some 20% of that will go to platform providers. It could be a $2 trillion opportunity. Wood said a handful of companies will dominate the market, and Tesla is well positioned to be one of those companies. They are developing both the hardware, electric cars, and the software, self-driving algorithms, and although analysts tend to look at them as just an automaker right now, that's not all they'll be down the road. We think if Tesla got even 5% of this global market for autonomous taxi networks, it should be worth another $100 billion today, Wood said. 3D printing goes big with finished products at scale. 3D printing has become part of mainstream consciousness thanks, mostly, to the prospect of desktop printers for consumer prices, but these are imperfect, and the dream of an at-home replicator still eludes us. The manufacturing industry, however, is much closer to using 3D printers at scale. Not long ago, we wrote about Carbon's partnership with Adidas to mass-produce shoe midsoles. This is significant because, whereas industrial 3D printing has focused on prototyping to date, improving cost, quality, and speed are making it viable for finished products. According to ARK, 3D printing may grow into a $41 billion market by 2020, and Wood noted a McKinsey forecast of as much as $490 billion by 2025. McKinsey will be right if 3D printing actually becomes a part of the industrial production process, so end-use parts, Wood said. CRISPR starts with genetic therapy, but it doesn't end there. According to ARK, The cost of genome editing has fallen 28x to 52x, depending on reagents, in the last 4 years. CRISPR is the technique leading the genome editing revolution, dramatically cutting time and cost while maintaining editing efficiency. Despite its potential, Wood said she isn't hearing enough about it from investors yet. There are roughly 10,000 monogenic or single-gene diseases. Only 5% are treatable today, she said. ARK believes treating these diseases is worth an annual $70 billion globally. Other areas of interest include stem cell therapy research, personalized medicine, drug development, agriculture, biofuels, and more. Still, the big names in this area, Intellia, Editas, and CRISPR, aren't on the radar. You can see if a company in this space has a strong IP position, as Genentech did in 1980, then the growth rates can be enormous, Wood said. Again, you don't hear these names, and that's quite interesting to me. We think there are very low expectations in that space. Mobile transactions could grow 15x by 2020. By 2022, 75% of the world will own a smartphone, according to Arkansas. Amid smartphones' many uses, mobile payments will be one of the most impactful. Coupled with better security, biometrics, and wider acceptance, NFC and point of sale, ARK thinks mobile transactions could grow 15x, from $1 trillion today to upwards of $15 trillion by 2022. In addition to making sharing economy transactions more frictionless, they are generally key to financial inclusion in emerging and developed markets, ARK says. And big emerging markets, such as India and China, are at the forefront, thanks to favorable regulations. Asia is leading the charge here, Wood said. You look at companies like Tencent and Alipay, they are really moving very quickly towards mobile and actually showing us the way. Robotics and automation to liberate $12 trillion by 2035. Robots aren't just for auto manufacturers anymore. Driven by continued cost declines and easier programming, more businesses are adopting robots. Amazon's robot workforce in warehouses has grown from 1,000 to nearly 50,000 since 2014. And they have never laid off anyone, other than for performance reasons, in their distribution centers, Wood said, but she understands fears over lost jobs. This is only the beginning of a big round of automation driven by cheaper, smarter, safer, and more flexible robots. She agrees there will be a lot of displacement. Still, some commentators overlook associated productivity gains. By 2035, Wood said US GDP could be $12 trillion more than it would have been without robotics and automation. That's a $40 trillion economy instead of a $28 trillion economy. This is the history of technology, productivity, new products and services. It is our job as investors to figure out where that $12 trillion is, Wood said. We can't even imagine it right now. We couldn't imagine what the internet was going to do with us in the early 90s. Blockchain and cryptoassets, speculatively spectacular. Blockchain-enabled cryptoassets, such as Bitcoin, Ethereum, and Steem, have caused more than a stir in recent years. In addition to Bitcoin, there are now some 700 cryptoassets of various shapes and hues. Bitcoin still rules the roost with a market value of nearly $40 billion, up from just $3 billion 2 years ago, according to Arkansas. But it's only half the total. This market is nascent. There are a lot of growing pains taking place right now in the crypto world, but the promise is there, Wood said. It's a very hot space. Like all young markets, ARK says, crypto-asset markets are characterized by enthusiasm, uncertainty, and speculation. The firm's blockchain products lead, Chris Burniske, uses Twitter, which is where he says the community congregates, to take the temperature. In a recent Twitter poll, 62% of respondents said they believed the market's total value would exceed $1 trillion in 10 years. In a follow-up, more focused on the trillion-plus crowd, 35% favored $1.5 trillion, 17% guessed $5 trillion, and 34% chose $10+ trillion. Looking past the speculation, Wood believes there's at least one big area blockchain and crypto assets are poised to break into, the $500 billion, fee-based business of sending money across borders known as remittances. If you look at the Philippines to South Korean corridor, what you're seeing already is that Bitcoin is 20% of the remittances market, Wood said. The migrant workers who are transmitting currency, they don't know that Bitcoin is what's enabling such a low-fee transaction. It's the rails, effectively. They just see the fiat transfer. We think that that's going to be a very exciting market. Thanks for watching. Please like and subscribe for more.